Hey everyone, it's Gail with Traders Help Desk, and in this video I'm actually going to go through the new Nadex Touch Brackets, why I love them, and then show you an example. In this case, I'm showing you an example of the NASDAQ from Friday. So the one thing I want you to notice on here, and this is really important because it highlights why I love the Nadex Touch Brackets. Number one, it's about risk to reward. Okay, to me, that's what everything is about. This is your risk, this is your reward. And in this case, you can see you're risking $122 to make $478. Okay, so if we divide that out, you have a risk to reward ratio of about 1 to 4. Actually comes up to 3.92, but if you average up, it's 1 to 4. So in this case, you're entering, and on entry, you have a total risk of $122. If it reaches up and it touches the ceiling, okay, because this is a long position, okay, so if it touches this number, then you will make $478. Now, if it reaches down and touches 62.22, then you will lose the risk that you paid on entry, which is $122. Now, on the touch brackets on the US 100, which is which uses the underlying NASDAQ, you have $1 per point for a contract, okay, on the touch brackets. In other words, each 25-cent increment is worth a quarter, okay? So now that we understand how the touch brackets work, and I mean literally, it's if touched, as the name implies, okay? So let's go and see how this actually played out, and I can explain it a little bit more in depth on the chart. Okay, over here on the right hand side is just a blank chart, and this is the 9 o'clock bar. It started building at 8:15. I'm using TradingView.com for my charting, and you can actually I have a link to that on my blog. I think it's a great platform for trading Forex or futures, either one, because you can pull it up no matter where you're at. You could go into the library and pull up a chart just by logging into TradingView. You can access it from literally any computer or an iPad or iPhone. So it's really kind of a cool platform. So in this case, this is the 9 o'clock bar. It started building at 8:15, and you can see it formed a doji, okay? And I like dojis if they're in the right place. And in this one, you can see that it did make a low, okay? And with the doji, it is the next bar, which is this one right here, that's going to determine the market direction, okay? Now, over on the left-hand side, you'll see the indicators that I have on my chart. This is the stochastics. This is the automatic fib numbers. I also have the support and resistance and the ATR. Now, you can see that we have an ATR here. We have the fib line here. Okay, so you've got a major fib line. You've got an ATR, and it's at the moving average. So you don't have one level of support. You don't have two levels of support. You actually have 3 levels of support on the NASDAQ on Friday morning before the market opened. So I believed that the market would go up off of this, okay? So the entry price was right here at 62.52.5. The floor was at 62.22. The ceiling was at 63.72. Okay, so my risk on this was the difference between my entry price down to the floor. Now, this is what's different with the touch brackets. If price comes back and it touches this line, okay, then you are automatically exited from your trade with a loss. In this case, the loss would have been $122, okay? Now, if it reaches up and it touches the ceiling of the bracket order, okay, then I would have made $478, okay? Now, that gives you your risk of 122, the reward of $478. Now, I like to show this on the chart because I believe it's very visual, okay? You're looking at your risk, which is between here, versus your reward, which is between here. So this is a trade that is skewed in your favor on the reward side, okay? If you're using numbers, it's 1 to 4, okay? That means literally if I did this 5 times, I would have to lose on at least 4 to actually lose my profits that I have made on this one trade, okay? That's what risk to reward is all about. It's skewing the numbers so that when you get the trade right, you have a lot more profit than what your average losses are, okay? Now, how are the touch brackets different from the call spreads? A couple of different ways. Number one is the width of the actual contract, okay? On the touch brackets, this is 150 points, okay? These are offered on a weekly basis, and they always expire Friday at 4:15 on the indices. On the Forex, they expire at 3 p.m. on Friday. But this is 150 points, okay? So that is a really big distance. Now, the call spreads, there's a couple of different things, okay? On the call spread, you have the 2-hour and the dailies available, okay? Each one has a different width to it. The 2-hour is, I think, 10 points. The dailies are maybe 30 points. You can go over to the stock indices contract specifications, and you can see they're all listed here. So you've got 2-hour on the US Tech 100, which utilizes the underlying instrument NASDAQ, okay? So you have the 2-hour has a range of 10 points. The one daily has 30 points, another daily has 40, another one has 80, okay? None of them have 150. So right now, with the volatility that we are experiencing, the touch brackets, to me, are a better method for, really making a profit, okay? A nice profit, I'll say that. Now, the other thing is, on the call spreads, remember it uses an expiration value. So in this case, on Friday, it expired here, so you would have made the you would have made the full spread on the NASDAQ that day, depending on where you entered, of course, whether it was a daily or a 2-hour. But with this one, it's if touched, okay? The one thing I didn't like about the call spreads when I was trading them a lot is, you could walk away from the computer and you would be here, but then, price would come down and close underneath the top of the spread, so you missed out on the profits there, okay? Well, with the if touched, that is not relevant, because this one, once it touched, then you were out of the trade, okay? The same thing on the loss side, okay? And that's what some people have said, well, I don't like that, because if it comes back and touches this, you're out. Well, I mean, that's the way I'm used to trading because I come from trading Forex and futures. So we always knew set your stop below where you want price to touch. Okay. Now, would they sometimes come back and touch your stop? Yes. But you always have the opportunity to go back in if your setup is still valid. Okay. I try to set or I try to look for spreads that are below the last low. So you have a low here that was actually testing this area right here and they rejected it. That's called a rejection, okay? And I teach you that in my new video course, Guide to Trading Today's Markets in 90 Days. This is a rejection, okay? These are excellent points for entry, but you always want to make sure that where you enter on your spread is below that rejection area, okay? So don't always take the low risk options on these. You still want to keep your risk to reward where you're higher on the reward side versus the risk. But what you don't want to do is say, hey, there's 62.22 and price is right here, so I'm going to enter it because there's only $10 of risk. Well, there is only $10 of risk and you're getting more on the profit side. The problem is you're not giving that price bar any room to move, okay? And price has to breathe. The market is a living thing. So it has to breathe. And you have to give this price bar room to breathe, okay? So in this case, because I waited until this bar, and this bar was moving up as I entered, then I said, okay, this is probably a safe distance because I'm about 30 points away from where price is currently trading. Now, it does take some time and experience to learn that, but, you know, it's fairly simple to learn. You just don't want to be sitting right on top of price on the touch brackets. That's important because it's if touched. In other words, if price touches this line, then that's it. You're out of the trade. So you don't want to be too close to this line, okay? But other than that, they are very similar to the call spreads. You just either you're out of the trade early or you make your profits earlier with the volatility that we're experiencing right now. But let's say that instead of moving all the way up here, that price expired right here, okay, at 4:15 that day. In that case, your profit would be from your entry point right up to where the expiration value was. Now, could you exit early? Of course. I think with all Nadex products, you can exit early. You know, they're never going to lock you in a trade. As a trader, you always have the option of exiting early, which again, something I like about the Nadex products because you feel like you're in control. Let's say that, and this is even on the risk side, okay? Let's say that price started to come down, okay? And I didn't like the way it was forming. So instead of going up, maybe it went up to here and then it started back down and let's say got to right here. Then I could scratch the trade, okay? I always have that option with Nadex. So there are multiple ways that you can trade this. You do not have to stay in until it touches your red line. It doesn't have to stay in until it touches the top. You know, you have the opportunity to exit at any point. Also, don't forget to subscribe to my channel. I am going to be going live more in the month of January, and I'll be showing the markets in general. I'll be showing the Forex markets as well as the indices and options for trading both binaries and touch brackets. And again, if you subscribe to my channel, then you'll be notified when I go live or when I post a new video. Thank you and have a wonderful day.